Hello and welcome. In this video, we will learn what circuit breakers are in the world of stock market. Alright. Now to begin with, we will see what circuit breakers really are. Circuit breakers are electrical items which prevent the damage of a circuit by stopping or breaking the circuit. Correct? Your house also has circuit breakers. They prevent the damage that can happen to a circuit by breaking the circuit. Now, this damage can happen due to short circuit or overloading. Right? The circuit breakers protect the system. Right? Now the circuit breakers that we are learning about in this video are the ones that are used in the stock market. In the stock market, circuit breakers are used to prevent damages that can happen to an investor due to too much volatility. Okay? Now the question, what is volatility? Price movement in both the directions or in a single direction. Okay? So you know that stock prices move up and down, correct? But moving too much in a single direction or moving too much in both the directions in a short duration of time is called as volatility. Okay? So if the price of a stock moves too much in any direction in a short duration of time, then it is considered as a volatile stock. Alright. Now what is the problem with stock moving too much in any direction? If the stock or stock price moves in any direction in either up or down by a large amount in a short duration of time, then an investor will lose his money. Okay? Traders will lose their money. You will know why in the future when you enter the stock market. Okay? But right now, do not worry too much about this. Alright. To prevent this from happening, to prevent investors and traders losing money, we have circuit breakers. Okay? Now the question comes, why does the price move too much in any direction in a short duration of time? Why does this happen? This happens due to too much optimism or too much pessimism. Okay? So the circuit breaker controls too much optimism and too much pessimism by halting the trade for a specified amount of time. Okay? If there is too much optimism, everyone will start buying. Okay? Everyone will start buying, which takes the price up. If there is too much pessimism by some news, okay, then everyone will start selling the shares. Then the price will move down. And if this happens in a short duration of time, then lose money. It will damage the portfolio of investors. So to prevent this, circuit breaker is used. Okay? Circuit breaker was introduced in June 2001. Alright. So now let me go to my desktop and take you to the NSE website to show you the details of the circuit breakers. Okay. Alright. Now I am in Google and I have searched for circuit breakers NSE and I have these results. Okay. So here I will click on circuit breakers from nseindia.com, and when I do that I will be taken to this page. Okay. So here are the details of the circuit breakers. So here are the trigger limits, trigger time, market halt duration and pre-open call option. Okay. So I will take this table and explain how this works. Alright. Let us assume that yesterday was August 1st and yesterday Nifty closed at 20,000. Okay. Let us assume that the closing value of Nifty was 20,000 yesterday. Alright. Now, these trigger limits are set by SEBI and the exchanges calculate the circuit breaker limits on day-to-day basis based on previous day's closing price. Okay. So I told you that yesterday was August 1st and Nifty closed at 20,000, right? Now today is August 2nd and the exchanges will have to calculate the circuit breaker limits for today, and this will be based on yesterday's closing price or closing value. Okay. So yesterday's closing value was 20,000. Alright. Now, the market opens at 9:15 a.m. for retail traders. Correct? Now let us say that there is a good news. There is a very good news. And due to this good news, let us say that at 9:30 a.m., the Nifty index hits the upper circuit. Now what is this upper circuit? It is previous day's close. Plus 10%. Previous day close was 20,000. 10% of 20,000 is 2,000. Okay, 10%. This is the trigger limit. Okay, trigger limit. So if Nifty hits 22,000 before 1 p.m., this is our condition, first condition. Okay, then the market will halt for 45 minutes. Market will halt for 45 minutes. Meaning trading stops till 10:15 a.m. Meaning no one will be able to buy or sell till 10:15 a.m. Okay, till 10:15 a.m. So the circuit was hit at 9:30 a.m. From 9:30 till 10:15 for 45 minutes, no trade will happen. Okay. So no one will be able to trade Nifty. Okay. Then from 10:15 a.m. till 10:30 a.m. there will be a pre-open call auction, okay, of 15 minutes from 10:15 to 10:30. There will be a pre-open call auction. You see, at 9:15 a.m. the market opens for retail traders. But the market will be open before 9:15 a.m. too, and we call it as pre-market session. So the same thing will happen here. Okay, the same thing will happen from 10:15 to 10:30. The exchanges will take orders and then match it up. Let us not worry about pre-open auction now. Okay, just know that from 10:15 to 10:30 there will be a pre-open auction, and at 10:30 a.m. the market reopens for trading. Okay, market reopens for trading. This is if Nifty hits the upper circuit before 1 p.m. Okay, before 1 p.m. All right. Now, this is for good news. The same thing happens if there is a bad news in the opposite direction. Okay. If there is a very bad news, let us say on August 2nd, Nifty hits the lower circuit. Now, what is lower circuit? Previous day's close minus 10%. 10%. So, if Nifty hits 18,000, then we say that Nifty has hit the lower circuit. Okay. So, if Nifty hits the lower circuit before 1 p.m., then trading stops till 10:15 a.m. Okay. So, if it hits lower circuit at 9:30 a.m., then till 10:45 a.m. trading will stop. If Nifty hits the lower circuit at 10 a.m., then till 10:45 a.m. trading stops. Okay, so for 45 minutes from the time the Nifty hits the lower circuit, okay, trading stops. Then from 10:15 to 10:30 there will be a pre-open call auction, and then market will reopen at 10:30 a.m. for trading. All right. Yes. So that is the first condition. I hope it is clear. Let us take the second condition. Let us say that there is a good news. There is a good news which has come late, and let us say at 1:30 p.m. At 1:30 p.m. there is a good news. Okay, on August 2nd. Due to this, let us say that Nifty hits the upper circuit. Okay, 10% upper circuit. Now, this is between 1 p.m. to 2:30 p.m. Correct? It happened at 1:30 p.m. So it is between 1 p.m. to 2:30 p.m. So 1 p.m. up to 2:30 p.m. All right. So if this happens, then trading stops till 1:45 p.m. At 1:30 p.m. Nifty hit the upper circuit. Then for 15 minutes, market will stop or halt, meaning no trading in the index will happen. All right. Then there is a pre-open call auction from 1:45 to 2 for 15 minutes. Okay. And then market reopens at 2 p.m. Okay. 2 p.m. and the trading can resume. All right. Now this is for good news. We have the same for the bad news also, but in the opposite direction. Okay. Now, let us say that there is a good news after 2:30 p.m. meaning this condition. Okay, this condition. All right. So if the market hits the upper circuit or lower circuit, so in this case upper circuit, because good news, upper circuit after 2:30 p.m., then there will be no halt, and no pre-open auction in the market. So the market will not stop if it hits upper circuit, okay, or lower circuit after 2:30 p.m. So the question is, what happens if Nifty hits, or if the indices hit upper circuit or lower circuit after 2:30 p.m.? In that case, they wait for the next trigger limit, which is 15% to happen. If that doesn't happen, then there will be no halt. Okay. So this is the first condition, which is for trigger limit of 10%. All right. Now let us proceed for 15%. 15%. Let us say that there is a good news, and due to which at 9:30 a.m. Nifty hits the first trigger limit, which is 10%. Okay, which is 10%. First trigger limit is 10%. Okay. Since it is before 1 p.m., trading stops till 10:15, and there will be a pre-open call auction, and the market opens at or reopens at 10:30 a.m. This is what we had seen in the previous slides, right? Now, after the market reopens at 10:30 a.m., if once again Nifty hits the upper circuit or lower circuit of 15%, meaning if Nifty goes to 20,000 plus 3,000 or 20,000 minus 3,000, which is the 15%, okay, then these conditions will apply. All right. So trading stops till 12:30 p.m. Let us assume that at 10:45 a.m. Nifty hits the upper circuit. Then for 1 hour 45 minutes from this time till 12:30 p.m., there will be no trades, meaning the market will halt. And from 12:30 p.m. to 12:45 p.m. for 15 minutes, there will be a pre-open call auction, and then the market reopens at 12:45 p.m. All right. So the same calculation goes for the downside also. And I think you can figure out the other conditions. All right. I'm not going to explain everything and bore you, but all these factors depends on when the indices hit the upper or lower circuit. Okay. Next, if at any time during the market hours indices hit 20% trigger limit, then for the remainder of the day the market halts. Okay. There will be no trade on that particular day. Okay. Now you don't have to remember all these. Okay. This was just an example to show you how the circuit breakers work. Okay. Now one thing you must remember is that the chances of indices hitting upper circuit or lower circuit are very, very rare. Okay. I want you to go to Google and search when was the last time Nifty hit the upper circuit or lower circuit, and try to understand why that happened. Okay. The chances of stocks hitting the upper or lower circuits are greater. Okay. Every now and then one or the other stock will be hitting its upper or lower circuit. Alright. So now I will go to my Zerodha dashboard and show you how to find out the circuit limits for each stock. Okay. Alright. So here I will enter CANBK. Now this is the ticker for Canara Bank. Okay. I will click on the plus button to add it to the watch list. And here is the script. Okay. You can see that the previous close is 125.70 rupees. Okay. Now this is not what I need now. What I need to do is click on market depth. Here you can see we have lower circuit as 113.13 and upper circuit as 138.27. Okay. Now these two are calculated using previous close. Okay. Previous close. Meaning yesterday's closing value decides today's upper and lower circuits. And in the same way, today's or the current closing value decides the upper and lower circuit limits for tomorrow. Okay. So if the stock hits this value or this value, then the trading stops for some time. That is all you need to know. Okay. So let me come here and enter Infi. Okay. And let me add it to the watch list. And here I will click on market depth and you can see I have lower limit and upper limit. Okay. So we will have this for every single stock. Alright. So this is all you need to know about upper and lower circuits. They are there to protect the investors. Alright.